Now, this is what I want you to understand. The strategy that I've been sharing here on my YouTube channel works even on gold. So I passed my ProfM challenge today using this setup that I've been sharing with you guys here on YouTube. And on this video, I'll be revealing the setup and the strategy that I used in taking this trade. Now, let's get to it. Hello traders, what's good? It's Mark out here. Welcome back to my YouTube channel, and on this video I'll be sharing with you a trade setup I took on gold using ICA's concept. Now today's video is going to be a short one as I'm going to dive quickly into explaining why I took the trade on gold. Now as you can see, we're on the weekly time frame, and the only function of the weekly time frame for me is to try and get a read on directional bias. Now your weekly and your daily time frame is an important time frame you need to always look out before making your trading decisions as a trader. High institution and high algorithm make use of the daily and the weekly time frame, so you must always understand what the draw on liquidity and where price is trying to go to on the weekly or daily time frame. Now this week I was expecting lower prices. I wanted to see price drop down into this fair value gap on the weekly time frame. This is the weekly candle, right? So I wanted to see price draw into this gap and also grab sell side liquidity that was resting below here. You get me? This is the only information I had to look out for on a weekly time frame. So let's drop to the 1 hour time frame. Now this is the 1 hour time frame, and just to clarify some things here, this is that liquidity that I was expecting price to grab. Now price grabbed that liquidity yesterday, and if I'm to mark that out, this is Wednesday, and then what's happening right here, this is Thursday, right? Yesterday we saw price grab here, and then I was expecting price, here is that weekly fair value gap, I was expecting price to come into this weekly fair value gap, right? So we were still up here by morning. This is the opening of today. We didn't tap into that fair value gap here. So since my directional bias is bearish to see price inside here, I wanted to take a sell down into this fair value gap. Now what is the significant thing that you can see here on this price action? Well, what I saw on the price action was this fair value gap that was created yesterday after the liquidity was grabbed. The low of this candle and the high of this candle is the fair value gap. The fair value gap is formed on the middle candle. So price formed this fair value gap and was trading inside of this fair value gap yesterday, which is Wednesday. How do you know when price is going to leave a fair value gap? How do you know when price is going to start moving from a fair value gap, right? Now the simple logic that I always use is once price taps into a fair value gap like this, you always want to see some sort of liquidity being grabbed. So ideally this is the rule. You need to write this down. Before any significant move down, you always want to see some sort of buy side liquidity being taken. Before any down movement, you need to see buy side liquidity being taken. So as you can see, this is the high here after price tapped into this fair value gap. This is the high here. Now during London session, this high was not grabbed. So moving into New York session, when I saw this, I was expecting price to grab this high, grab this London high, and then drop, give me my setup. So this is the only thing I was interested in on the 1 hour time frame, right? Just to mark out this fair value gap, understand where I am currently at, and then know where I am going to. Remember, directional bias is understanding where price is going to, where is price currently at, and where is price coming from. So where is price coming from and where is price currently at? Price is in a fair value gap, and then where is price going to? Price is definitely going to this weekly fair value gap. This is the only information I took out from the 1 hour time frame, just keeping it simple, you get me? So let's drop down to the 15-minute time frame. Alright guys, so this is the 15-minute time frame. This is the 1 hour fair value gap. Now remember, New York session is basically when I take majority of my trade setups, right? Since price was still inside the fair value gap, I wanted to see price come back in and then grab London high. Now this was the high that was formed during London. Remember, our setup normally forms when previous day high has been grabbed, previous session high and previous week high has been grabbed, or any significant old high or old lows. So this was a previous session high, which was London session high. So I wanted to see price come back into the fair value gap, and what made this grab significant, because the liquidity was resting inside a 1 hour PDRA, a 1 hour fair value gap. So this is basically significant, right? So after the grab, what do you want to see? You want to see huge displacement candle doing what? Breaking market structure It's what I've been sharing here on YouTube. It's exactly the same setup. Now price grabbed this liquidity here, came back with huge displacement candle, breaking market structure, and it did what? It left behind a fair value gap here, right? This is the gap, the low and the high of this candle. The middle candle is the fair value gap. So if I'm to mark out the fair value gap, this is exactly where I took my trade, and this is the trade that I took today on gold. It's as simple as that. You want to see liquidity being grabbed first. What made this trade more valid to me was because all this happened inside a 1 hour fair value gap. So this is what I call a high probability trade setup. You understand me? So price grabbed that liquidity, broke market structure with huge displacement, leaving behind fair value gap, and then price went back in, and that was the trade setup. Easy peasy. Easy as ABC, and all this happened in accordance to time, New York time, right? That is when I took this trade setup, and then my stop loss was basically here, above 50% of this week, you get me? And then as usual, I target 1:3, right? So that was the trade setup. Now when price got here, I actually took out partials, right, and allowed the rest to run till TP. So this was the trade setup that I took on gold. What I also noticed when I came down to the 15 minutes was this fair value gap here, right, slightly above and also inside the 1 hour fair value gap. You get me? So as you can see, price tapped into this 15-minute fair value gap. Right now, this was a news reaction. We had USD news today by 8:30 New York time. That's 1:30 Nigerian time. So we had news driver today. The news, as you can see, helped grab liquidity and also helped tap into a PDRA. So news drivers are basically there to help us write out this signature setup. Price tapped into that and then broke market structure, drop a fair value gap, and then that was the entry. Now this strategy works on gold. This strategy works on stock market. This strategy works on crypto. This strategy works everywhere. It's working because it's a pure price action strategy. You don't need to draw trend lines to see a third touch, or you don't need all those things. You get me? It's just pure price action. It's as simple as this. All I had to do was create a storyline, follow the storyline, and then execute my trades. The first thing I had to do was understand directional bias, where price was basically drawn to on the weekly time frame, where it was going to, which is this fair value gap here. And then after understanding this, I went to the 1 hour time frame to look for a PDRA. 1 hour time frame and 1 hour fair value gaps are very, very significant on gold. So if you want to utilize FVGs very well on gold, you should look at using 1 hour fair value gap. I went to the 1 hour time frame and I spotted a 1 hour fair value gap and I marked it out, and price was basically inside there. And then I need to see a signature during when I trade, and that is New York time. And then what happened? The entry signature happened. Grab of liquidity, break of market structure, fair value gap, and then entry. So this was a simple trade setup. So this strategy works every time. You get me? It works every day, but it might not be on the same pair, but it happens every day across the major pairs of USD. You get me? So hopefully this was insightful for you guys. Thank you guys for supporting the community. We are on 700 subscribers. Let's bag these profits together. Remember, this is the simple setup that I use in passing my Profirm challenge, and I believe that someone else that has the right information can also use this setup to pass his or her Profirm challenge. You get me? So do well to hit the like button, subscribe, and turn on post notification. If you want to follow me on my updates and you want to follow me personally, the link to my Telegram channel is on the description box. Do well to join my Telegram. Until I talk to you guys next time, peace out.